The watch is on for some of these deep supply cuts. Our Brian Sullivan is still in Vienna, Austria with the latest. Big day, Brian. Good morning.
Yeah, I mean, Carl, it really is a big day, and I know the price of oil is not moving a whole lot now, but the price of oil has moved $10 a barrel in the last couple of days on this expectation, and we are expecting a cut of about 2 million barrels per day. Now, the 2 million barrels is not going to come off the market because a lot of these OPEC members are not hitting their quotas anyway. Call it 50 to 60%. So if that's the case, Carl, we're talking about maybe 1 million physical barrels a day actually coming off the market. Now, are they expected to do it all at once? No. All of our sources telling us, the delegates that we have texted and talked to say this is probably going to be a rolling 2 million barrels over a certain amount of time. But focus less perhaps on the number and more on the symbolism, guys, of this. OPEC was an organization a year and a half ago, where they're talking about OPEC's dead. The UAE and Saudi Arabia are fighting that the organization is outlived its course and is done. We're seeing the Saudi minister arrive. We're seeing the Russian minister arrive, by the way. This is OPEC saying, not only are we aligned, we're aligned with Russia. By the way, bringing the ties closer together with Russia. U.S. is going to be very upset about that. But also that we are in charge of at least half the global oil market. This is, unfortunately, a direct rebuke to the White House, who, by all reports, Kayla Tausche reported the same, was trying desperately to stop this production cut. It's happening, guys, and it's happening in a tight market. I have never seen a cut when the market is as tight as this. This can only be seen as sending a pretty loud message.
So many cross currents here. When you look at energy stocks, Brian, up 9% over the past week, 10% just since the start of this week on this move in crude prices. So what does this mean for oil and gas stocks? And then, of course, what are U.S. oil and gas executives saying? I mean, I think back to 2015, 2016, it was a very different dynamic on the world stage where oil was concerned.
Yeah, absolutely, Morgan. I was texting and emailing with some executives yesterday and this morning. Scott Sheffield, a pioneer, maybe the most listened to. By the way, the only oil and gas CEO I've ever seen at an OPEC meeting. He said OPEC is going to defend $100 on Brent. So that would be, what, 94, 95 on WTI. He thought that was the right move. So what do they think? I mean, look at oil and gas stocks today. By the way, not to jump in, we've got Paul Sankey of Sankey Research, who's standing right here. So you actually are an analyst. Very quickly, Paul, is this good for the U.S. oil and gas sector?
At face value, it is, but we're worried about the economy and about the demand side, Brian. So ultimately, if this damages the global economy and ultimately demand for oil, it's actually not as good as it thinks.
Will it damage the global economy?
I think we're worried about it going into winter, definitely.
Okay. Paul, thanks. It's kind of an impromptu there from Paul, but that's what you get by being on the ground here. So that's the concern, guys. Maybe good in the short term for U.S. oil and gas producers. If oil hits back to $100, $120 a barrel, which is entirely possible as we head into winter, will that crush, to Paul's point, the global economy and then send oil back down? That's the risk that OPEC and Russia are taking. We're waiting on the press conference, hopefully get more answers about why they're doing it. It's a very unusual cut at a very unusual time.